often you get some kind of letter saying that we've been pre-approved for X amount of a house. What does that mean?
It really means nothing.
Oh.
I hate to say it that way, but in the same breath, it's especially when you're looking at a high ratio, so an insured mortgage. The insurers, the lenders give us guidelines to go with. And so we have this box that we have to fit the client into. So we look at the client's credit, we look at their down payment, we look at their income, we look at the full application, and we say, this looks exactly what the lender's looking for. And there's a lot of circumstances where I still want to get the lender's eyes to look at it. So I'll send it off to a lender to get them to review it as well. But CMHC and Genworth and Canada Guarantee, the insurers, they are the ones who have the final decision, and they don't do pre-approvals. So if you're going to a bank, this is the same situation as going to a mortgage broker. The insurer does not review applications without having an offer on a property. So, and I advise my clients of this, even though you're going out looking for properties, that still could come up, you could still end up having an issue getting an approval because CMHC hasn't done their review. And they give us the guidelines.
They have the final say.
They have the final say. They give us the guidelines, but there's still certain circumstances where they come back with something that you would never have expected that causes the application to be declined. So that's where a pre-approval is only as good as the eyes that have seen it. And there's nothing more that I can say to, we try and fit it in the box, but in the end it's the insurer.
It sounds like it comes down to experience a lot. Like if you dealt with CMHC a lot, then you would get to know what kind of things they would come back with. Absolutely.
And that's so important, because if you have the experience, then you've seen certain things that CMHC or Genworth have come back with as far as concerns, and you can kind of weed that issue out before you would send the client out looking for a house.
Does CMHC tell you things like when they change their rules, what kind of rules are changing, how you can fit them better in the box?
Yes. CMHC always sends out their guideline changes. We have access to their website so that we can see what their guidelines are at any point. But they still like to come out with different things along the way, and I recently found out that they look at the overall debt load to the income, meaning what the actual balances are on the debt to what your full income is, not just the debt service ratio. It's looking at how much overall is owing.
I see.
And so those are things that have recently come out that there's no guidelines, there's nothing that tells us that they look at that. But that was a concern for one specific client. So now going forward, I look at that, going, is that potentially an issue?
How do you differ as a mortgage broker from a mortgage broker that I can find in a bank?
There are no mortgage brokers with banks. They're basically mortgage specialists.
Even if it says mortgage brokers on their card?
If they're a mortgage broker, they should be licensed through the Real Estate Council of Alberta, and they've never had to do the training in order to do that. So unless they're a one-off where they actually have had that experience, that training through the Real Estate Council of Alberta in order to have that license, then for the most part they are just bank employees that specialize in mortgages. So I like to say that they are mortgage specialists for CIBC, Bank of Montreal, because they really only deal with one bank.
So they can't offer any other lenders, just that one bank?
Exactly. And that's where when I'm asked, as a mortgage broker, what bank do you work for? I laugh at that because of the fact that I am a true mortgage broker. I have access to 20 different lenders. I have access to the banks as well. So when I'm looking for the best deal for my client, I'm not just looking at one set of products for one lender. I'm looking at multiple products for multiple lenders and making sure you fit in that. And versus a mortgage specialist with a bank, they only have their set of products. And they may have, background people that they refer out to that also, like, for example, Royal Bank has a alternative side of Royal Bank. That's their way of retaining their clients that don't necessarily qualify right now. They hate to send them away, but they are still Royal Bank employees.
I see. So do banks frown upon mortgage brokers?
Banks don't like us, yeah.
Why is that?
Because of the fact that we're forcing them to be more competitive and cut their rates down.
Okay. Because you can offer a discount rate, whereas they want to offer the posted rate, which would typically be higher, right?
Exactly. And so they go and they would say, if a client goes to the bank first and says, what are you going to offer me for my mortgage? They might come back with the 3.29, as I said earlier. But then they come to me and I can offer them 2.99 or 2.89. Sometimes that same client will go back to their bank and say, well, why didn't you offer this to me? Oh, well, I'll give it to you now. So they'll do the price match on it.
Okay, but only after they find out that you can offer something better, and go back to the bank and they're like, well, yeah, sure, we can do it.
Only after the client had to do the work to find that out.
And
that's where I wish that the banks would just give the best rate right off the bat to the clients that deserve it.
So why don't they?
They want to make more money.
And they make money by having you get the mortgage with them. And the higher interest rate you charge them, then the more money they can lend out again, right?
Exactly.
I see.
Exactly.
Can you explain what a CMHC insurance is?
CMHC Insurance and Genworth and Canada Guarantee, they are the insurers that insure your mortgage. In the case that you default, they will pay the lender for your mortgage.
So it doesn't protect the client itself,
No.
it protects the lender.
Exactly. So it's insurance for the lender on you, but you have to pay that fee in order to do it. So that's
Sounds kind of backwards.
that's the cost to put less than 20% down, is that you have to pay the CMHC fee.
So anytime you put in less than 20% down payment on the purchase price, you would have to pay this fee.
Yes.
Okay.
And it's tiered as well. So if you put only 5% down, you pay a premium right now of 2.75%. If you put less than or more than 5% down, at 90% loan to value, so 10% down, you pay 2% in CMHC fees. So it is tiered based on how much you put down.
So is the range, so from 5 to 10 is that amount? Okay, so you could pay 7% down payment if you really wanted to.
You could pay 7% down payment, and you're still going to pay the 2% CMHC fee.
Okay, and minimum is 5% down payment?
Yes.
What about the cases where you mentioned 100% financing? Is there CMHC on that one?
Yes. So what that is basically I've structured a down payment coming from borrowed funds.
Okay.
And so there is technically that 5% down still going towards your mortgage. So then you still pay CMHC at the 95% financing stage.
But if you borrow more, let's say 20%, then does that waive the CMHC even with the borrowed funds?
Yes.
Okay.
If you borrow the full 20% so that you avoid CMHC,
I see.
then you would waive the fee.
Okay, and what is the mortgage insurance? Is that something that everybody should be getting?
Mortgage life insurance
Yes.
is life insurance on the mortgage as it sounds. So it's basically the situation where if you have a husband and wife, if one of them were to pass away, then the mortgage would get paid off. Now, true mortgage insurance is a depreciating balance. So as you pay down your mortgage, your coverage is also decreased to what your balance is. So that's where the mortgage insurance is seen as being negative, because you pay a premium based on that full amount at the beginning, and you continue to pay that same premium throughout. But that premium is adjusted if you're doing a term insurance versus the mortgage insurance. Usually term insurance would be more expensive because of the fact that it is not depreciating. But for some people, they just want to know that their mortgage is paid off. What if something were to happen to them, and that's it.
Is it something you would suggest?
No, I always recommend term insurance if you can afford it.
I see. Just because it provides a little bit more flexibility to cover other things than just the mortgage and also the depreciation part, right?
Exactly.
When my term is coming up for my mortgage and I need to renew, what happens? Sometimes I know I get a letter and then my previous lenders tell me to renew. Is that a good idea, just to sign the paper and send it off?
No, it's not a good idea. It's always a good idea to take a look at what's out there at that point. I have lots of clients that are up for renewal, and I ask them just to send me their renewal letter, because I want to review it and make sure that they're being offered the lowest rates
I see.
for what's out there right now. And there's no way the client would know what's offered right now.
Yeah,
So
they're not
it's-
always in the business like you are, looking at
Exactly.
the mortgages.
So it's nice for me to just take a look at it, and if I feel that the lender is offering them the best rates, then yes, just sign it and send it back based on what, the conversation that we have. But if they're not getting offered the best rates, then I can go around and look at what the best rates are out there.
Shop for them.
Yeah.
Okay. So how big is this percentage where you just tell people to sign it off because they are being offered the best rate? Is it a low percentage, a high percentage? Or does it vary?
I'd say it's even a 1%.
Really?
It's very
That
low.
little?
Yes. Most lenders, there's this, especially with the major banks, the banks will always offer them the posted rates.
Which is high.
Yeah, extremely high. So the clients get this letter in the mail, and they're just surprised at these high interest rates, and they're calling me going, well, this is the rates. Is this true? And it's always a situation where the bank wants the client to go to the bank, sit down with the finance person before they're actually going to negotiate the rates. So they want them to actually book that appointment, get them in, sit them down, and take the time out of their day to do that. Versus send me the letter, I can take a look at it, give you what's the best rates out there right now, and get you approved for your renewal. And with a transfer, when your mortgage is up for renewal, we can basically transfer your mortgage from any lender to, unless it's a collateral mortgage, which is a whole different story, but you can transfer your mortgage from that lender to a new one with no cost to you.
Oh, so there's no penalty at all to transfer?
No penalty, no appraisal fees, no legal fees, nothing.
Okay.
The new lender pays for it all because they want your business.
Okay, so when you transfer, you also renew at the same time with this,
Yes.
whatever rate it is?
Yes.